The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday and market days. 877-927-6648 is the number to call. Got a great kickoff today, 9 o'clock. Steve Rhodes always comes in. Today's being Thursday. We've got Larry Pesavento following me. Got programming right through the day. Just great programming. Folks, we here at TFNN very often have educational courses that we give. We also have webinars. And tonight there should be just a wonderful webinar given by Andy Hecht. So please go to the front page of TFNN. Check it out. You need to be a subscriber. But you can do that. You can go to the webinar for free by just signing up as a trial member, I believe. There should be no problem with that. So check it out. It's this evening. I believe it will be at 6:30 Eastern Time. And it should be a fabulous show. And I in fact, I'm going to do some of the commodities in a short while. I want to go through a number of things. First, let's just tell you that the Dow having a nice bounce back, getting back about half of the loss of yesterday. It's up. Let me just get this right here in front of you so those of you looking at my charts can see what I'm looking at. This is the Dow up 85 at 15,823. The stochastic's trying to turn. It tried yesterday and failed. Trying again today. It should succeed. There should be an oversold bounce. There's just no question about it. Where could the Dow go to? Certainly it can go to the 15,920 level. But my suspicion is the 9-period exponential moving average of 16,000. If it's a 3 to 5 day rally, then possibly we can go a little higher. And I'm watching something very closely because the IBB, which is the NASDAQ Biotech area, it's the ETF, which is constantly for years now being the go-to place whenever there's a very sharp pullback and then a sudden rebound. That's where fund managers tend to want to go, and they grab it. And in fact, we got stopped out of our short position. We on the 200% short ETF, we made a nice little profit, and on the actual short of the IBB, we made a few points. We had a lot of points before. I thought this would be the big one. This is the third time we've had fantastic gains. Before I gave most of them back, this time I'm not prepared to give. I'm not prepared to take a loss. That's it. So we're out, but I will be getting back in. And all I'm saying is that there's a chance that we need to see the IBB instead of peak C, which would have been an unusual failure, possibly make leg D, and then it starts down for the next leg of the bear phase of this consolidation period in the markets. So let's go on. So you've got the Dow right here. Certainly at any point in the next 3 days, if we take out 15,700, 708 was the low, testing the 703 low back on December the 12th was? Yeah, this December the 12th, where we took off for that spectacular ride from 15,703 to 16,588, some 800 points, almost 900 points. And that isolated single leg up, what I call the camel hump in the stochastic, often gives back and then goes underneath the left side low. But so far it's held. So far that's a big positive. It says you can rally. Where can you rally to? Usually the left side peak that was passed on the way down would be your major target as the rebound level to tell how much strength there is, and that's at 15,945. S&P right now is having a much better gain than the Dow. The Dow is having a 0.50%, and the S&P is up 0.80 at 1788, up 1408. Now the S&P has in fact gone to 9015, 9061. It's broken yesterday's opening high, which was in fact the high of the day. And that is really good. In other words, from the smash to the downside from 1790 to 1770. That's a 20-point drop. We're back slightly above. We were back slightly above it. The candle looks like it wants to do that. And if so, we would say 1802 would be the 9-period exponential moving average because there's no peak on the left side. That's the 9-period moving average resistance. And that should take, as I was saying to subscribers, could see a 3-day to a 5-day arch to the upside. The 120-minute chart is looking like that H pattern could go to an M pattern with very strong resistance between 1793 and 1795. So 1802 would be really good. We'll see if we can do that. The stochastic and MACD are in fact favorably inclined right now. Let's go to the comp index is up 57 at 4108. Let's go to QQQ just to see. The QQQ had a spectacular spike to the upside this morning. There are a lot of stocks that are helping it. This is a leg A, and it's 86.19 up 124. This is one of the biggest bounces to the upside we've seen in quite some time. And most importantly, 89 was the round number high. I think that we're going to bounce to about 86.58 is the Q's 9-period exponential moving average resistance, and 86.73 is the 200 period in the 120-minute chart. So the mid-86 is going to be the real challenge, but I'm suspecting that it could go a little bit higher than that. We'll see what Google has to say this evening when it comes out with its results immediately after the close, because Google, in fact, has the same QQQ chart, made a peak D at 1164 round number high, and then spiked just a tad higher to 1167.89. So I'm going to be watching this real closely. Why? A, B, C, D, E, F. I didn't finish that. Yes, there. Folks, the Chapman wave methodology looks for the lowest, most identifiable low bar, expects you to get to at least a peak D. You can see that the Google daily has gone twice to D and then has sharp pullbacks. The last one was the deepest. In the 120-minute chart, it made a decline and then rallied back up to this pattern that I was just calling the double hump, camel hump. Sounds so weird. Stochastic. And then we go to a peak F, which is something you really have to watch for. Those peak Fs can be deadly. And what happens, it goes from that 1167.89 high to the most recent low 4 days ago of 1082.01. That is a huge pullback. 1082.01. Let's go on, and we're looking at gold, GCG. Yes, some questions in the den. I certainly will look at copper. Certainly will look at Facebook. And there was one other one. There was a question. I'll find it. So gold made a peak D in the contract itself, and has pulled back very sharply. As I said, peak D is where you can expect the deepest consolidation to take place. But the 120-minute chart only made, oh, what am I doing? That is A. Yeah, C minus. Again, second time it fell to the C minus. So that says you can go down very sharply. And in fact, it went underneath the 200-period moving average in the 120-minute chart of 1246 in the February gold contract. And it looks to me like it really wants to get close to the 1220 low of the 22nd of January. I've got a feeling here. Let me just do the dollar, DXY. I'm going to do a bunch of these things here, going through commodities as well. Here it is. In the dollar's rally today is very important because AB, said restarts, A, B, C, D, E, starts a brand new A, B, B/C. Yeah. I think the dollar, in fact, is going to retest the high of 81.31 made on the 22nd. Isn't that interesting? Looking at the diametrically opposed dollar and gold, which is the traditional way that I've always looked at these things. But there are periods where they do go parallel. Did that just recently. And I'm suspecting that gold is going to pull back a little more while the dollar attempts to break 81.39, the high of the week of the 24th. That was that 21st that I was just saying. And if it does that, then 81.48 is the high of the week of the 8th of November. And we'll watch real closely. Why? Because it made a peak F in the monthly. And it's going to be very important because if the dollar is able to break into the 82s, that starts to show the kind of momentum that says it could impact gold negatively. We do not have any gold. In fact, we don't have any metal stocks at this particular point. I didn't like the action in some of them, and I raised the stops. So now I'm going to look at, so that was the dollar. I need to look at high-grade copper, looking at the March contract. You know, I'm worried about copper. We did have a copper stock. We got stopped out for a small profit. I'm looking at this copper contract, and I'm saying to myself, we were up at the top, and that's what I said, of the rectangle formation, this H that goes to an M pattern, just a constant rally towards the upper band in the 3.40s, and then what happens? Plop. The rug gets pulled and it goes down. And I had said my target would be between 3.15 and 3.12. That was the lows in November, and on the way up. And that'll be key. If copper breaks 3.12, it's going down to the bottom of the rectangle to about $3. If that's the case, then I'm pretty sure that we will be looking at lower highs and lower lows in the general stock market. So I think I've covered most of what I wanted to do. Now let's go to Facebook. That was the first question. FB, Facebook. Can't believe we had it way back. Now this to me is a recycle, and I have to call this leg C in the weekly, leg C in the monthly, and in the daily. I would not be surprised if this is a brand new leg B. And if that's the case, it says it fits right in with certain stocks in a rotational manner, certain stocks possibly ignoring the general market and managing to move higher, and other stocks that are absolute market participants, and as the market pulls back, so they will pull back. And let me explain what I'm looking at. Look at BIIB. This is Biogen IDEC. It is trading right now, testing the long wick that was made yesterday, huge wick, going to an all-time high of 318.42. There's a biopharma. It's in G/C in the monthly chart, possibly F in the weekly. I don't want to change anything just yet. I'm calling it F. There's no sell signal at all now on the weekly. There was earlier because it was pulling back so sharply. Now it's broken out almost to new all-time highs. And this is saying to me that I cannot rule out that the IBB is going to go to a leg D above 254.11. That's why I wanted to take profits. It went all the way, we were short from 253.40. Less than a point of the all-time high. Went all the way down to 234.15. Didn't cover. This is the third time I've done it with a major decline, major for this index, and it's sprung all the way back. I have to tell you, the Energizer Bunny can just be spectacular in some areas. I'll be looking at Facebook a little closer.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, and this is the Tiger Technicians Hour. Don't forget, my service is the opening call. We took profits this morning, between yesterday and today, on our many of our short positions. Some of them were just fabulous gains. Gave up some as well, as I just told you on the IBB, but that's how it is. And just wanted to say the Dow broke out to the upside. It's now at 15,846. It's up 106. S&P is way strong. It's up 17 at 1791. Really nice move to the upside. Now, I was asked about platinum. High-grade copper pulling back. Platinum made a peak E-top. I'm looking at the continuous contract, and that was on the 21st. Interesting how the 21st wrote reversal days, so many of the different indexes. And so now what I'm looking at is that the high that was made on the 21st has the pattern that I call the Eiffel Tower. Why? Because it looks just like the Eiffel Tower that goes straight up like an uppercase A. Let me just draw this in. I always love to do this. And that's the pattern that we've got to be aware could possibly unfold in platinum. Straight up and straight down, and it's at 1380 right now. The continuous contract, plat 1382 on the actual contract itself. And my suspicion is that if we're looking at the platinum daily, it's saying that if it breaks 1360, there's just a really good chance that it could come tumbling down all the way to the 1340s. The most recent low was at 1318. Let me just double check. 13. 13.12. So that's something. And then in the weekly chart, this was a single A up. All the others went A to B minus and failed. The next one was A minus and failed. This one is an A, and it'll become an A minus if it drops even just another 10 points. So this is not good action. And I have to tell you something, that monthly chart, the big arch formation that we're looking at, says, please hold here, because if you don't, you're going to make a leg C, a leg D to the downside, and 1206 would be a target on the monthly chart if those key levels of support, especially the one here of 1300, is taken out. That was the one that was made in June of 2013. So there has to be a real nice turnaround, and that turnaround is not good enough just to turn around. It has to actually climb into the 1422 plus area, and then platinum will start to be on its way again. Now, here's something else that I was looking at. At W, wheat. Now, I had this all notated before, but I'm not going to complain. I spent a lot of time with Sarah from TradeStation last night, and she really understood a bunch. She said that I'm the only one on the engineer's spec so far that has the two particular problems that I discussed. Boy, do I need that out of the thousands of customers that they have, tens of thousands. I have to be the guy with the only problem. Okay, so wheat at one point back in December of 2005 made a low, and that went to peak A, B, C, D, and then spiraled up to an E February of 2008. So it went from around about 1,007 to 1873. I would say that's a huge move. And now it's made troughs on the way down. Just keeps having rally failures. And this last one, this is on a monthly basis with 1 day to go. This January bar is saying, wow, if there isn't support very soon in wheat, we could be looking at deflationary aspect in wheat. Let's go to copper. Let's go to corn. And this is corn. Now, I know there are all these different corns. I've just the continuous contract, which I've done a lot of work on. And this one has big spirals to the upside, hardly ever goes to a D, just spirals up and then spirals down. And now it's in this very important range. If corn, continuous contract, starts to take out it's at 433. If it goes under 398, corn is going down as well, both wheat and corn. So it's got to rally right now and break above 468. If it does that, that'll have saved the day. The weekly says, nice start to a rally attempt. You're in A at 435, 48, 434. You're in A. You only need to go another point higher just by tomorrow afternoon at 4 to start leg B in the weekly. And the daily has had a very nice turnaround. The corn chart looks way better than the wheat. Now, here's something that's important. The spiral that was made 2 weeks ago from the bottom that has gone to an A minus and then restarts and goes to an A, to a B, to a C, has to, in the C, not D, but right now in C, has to spike higher and go above 435 and a half. That'll be very important. That'll be saying there could be a fulcrum push that would give you the one-to-one to the upside. I'll be right back.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, is going up in price again at the end of this month. Andy's weekly newsletter has delivered multiple profitable trades for his subscribers, even including a triple-digit winner within recent months. Right now is a perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy will also be hosting a subscriber event on Thursday, January 30th, Seasonality in Energy and Agricultural Commodities, that you can gain access to by simply signing up for a free trial to Andy Hecht's newsletter, the Technomental Commodity Report. A 30-day free trial to the Technomental Commodity Report, a free 60-minute live online webinar with Andy Hecht, which will be archived, and you lock in the low price of $49 a month should you decide to continue after your 30-day free trial. Offers don't get much better than this. Act now before January is over and this offer passes you by. Sign up for your 30-day free trial to the Technomental Commodity Report today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Just to finish up, I do like the action very much in the corner, the very short term. I do think it's going high, and I had to put an up arrow here suggesting that it should go to a D. The big test will be at on the continuous contract at 440.5, and the 120 minute looks good. And I just wanted to quickly finish and say KC, which I was discussing either yesterday live or I did it in the den. I said I liked very much the way coffee was acting, and that the coffee 120 was in leg C, is still in leg C with a huge move up, and there's a target of a possible retest of the high of 122.60 made on the 7th of January. Nice action in coffee on the daily. That's really helping the weekly. Weekly, I would love to see. I don't think you can do it by tomorrow above 122.60. Certainly by Monday, that'll be good. And that's really helping the weekly chart. A break below 114 to 112 would be very negative. Let's go to Robert in Chicago. Robert, how are you?
Hello, Basil.
Hi, how are you?
Basil, how are you?
I'm good, thank you.
I want to look at Whole Foods market.
Okay, Whole Foods WFM had a pretty sharp pullback to the 50.62 area on the 27th. It's had 3 days of a slight up move to the 52.37 level. Weekly chart made a peak D, monthly chart made a peak E, and what do we have here on the daily? Let me just check it out here. The daily had a rebound to the high of 59.70. It couldn't fill the gap, that huge gap from the 7th, the 6th to the 7th of November, and that's going to be really tough. All right, so what's the story?
Well, they report on the 12th of February.
Oh, okay. And you have
I don't have a position. I'm just wondering if it's going to act similar to Under Armour has, where it's kind of run up to earnings, and look what happened to Under Armour today.
Yeah, let me just, Under Armour right now is up a little bit, folks. It's just up 23%, up 19.90 at 105.12. It looked just the other day with the peak F top on the 10th at 88.77, with a two-bar reversal of the high of 88.75 the next day on the 13th. It pulls back to 81, so it goes 88, so it pulls back 10%. Looks very ugly in the monthly. The weekly chart is in leg F, and out of the blue comes this fantastic report. It must have been a fantastic report. You know, Whole Foods and Under Armour, and I'm trying to think, and to a great extent Starbucks, have been companies, the very rare companies that we witness through market, through the price of watching the stock, but they are the rare companies that reinvent themselves constantly. Because if you look at Under Armour, I mean, what are they doing? It's just in a very mundane area, and then out of the blue they produce the sports apparel, and each time it's an innovative. I've actually never bought anything from Under Armour, but they produce the stuff, and it's just, it takes off like hotcakes. People just love it, and that's kind of what must be going on here. So this is saying, when I was talking at the very beginning of the show, when I was my monologue, I was discussing the rotational aspect that has certain stocks that have acted very well, continue to act very well. That included some in the IBB, that's the biotech area, and then other stocks that they just can't get out of their own way. So to a certain extent, Whole Foods was one of those stocks that could not do wrong. It was constantly reinventing itself. My suspicion with Whole Foods, and I've said this for a couple of months now, is that I suspect I'm looking at a monthly hat-trick top that starts off in the monthly at peak E, goes to the upper part of the inside wave, the Chapman wave. It's called the inside track resistance repellent zone. Starts to move down, gets confirmed in the weekly, but it has to start off in the daily chart. It's actually the other way around. Starts off in the daily chart with the two little dojis back on the 28th and 29th of October at 65.59, and then it goes to the weekly chart with a very strong pullback the following week, the week of the 8th of November, and then it goes to the daily. Now, what's really important about this is that in the case of Whole Foods, I suspect that in many ways they've run out of new niches, new areas, but they will be back. But at this particular point, they're under pressure. Under Armour, I would have said just 2 days ago, and I would have been wrong, that maybe Under Armour is in that same category. So whether this is just a news-related final coda spike that just takes it to this high of today, which is at 106.65. Let me just type that in. I want to see if there's any round numbers here. 106.65. 106.65. I just need to check this here to see. So it opens today, right there. It opens at, round number 96, all right. And it goes to 106.65, and right now it's trading at 105.36. At any point in the next couple of weeks, if it closes 3 out of 5 sessions underneath 96, this is the high, and it's a high for quite a while. If, in fact, it maintains this upward move and it doesn't pull back below on a 120-minute bar, it doesn't close below 102.50, that's just 4 points away, but instead it just makes a high-level consolidation and actually goes higher than 106.65, that's going to be a different kettle of fish. That says there's still more to go in this stock. So now we're looking at Starbucks. You didn't ask about it, but I wanted to put them in the same category. As I say, these are companies that have reinvented themselves. Now, I have a problem here. Is Starbucks at a peak G or a C in the monthly chart? I can only do this by saying if it closes January under the 9 EMA, that'll be the first hint that it could be a G. Let me put that in here. In Starbucks, it's trading right now at 72.04, so G/C, with a doji candle. Everything about it in the monthly chart says there should be a deeper pullback, but we have to just let that be for now. The weekly chart says, oh man, Starbucks is looking very poor with a peak C1, C2. It could also be a G top at that doji high at whatever I said it was, 80, I forgot to type it in, 8250, and what we're looking at in the daily says, wow, Starbucks is in deep trouble. It's having a terrible time. If it rallies at all, 76 to 77 would be the upside limit. Now, what you've done for me is set in place the idea that maybe Under Armour is in the phase that says watch real closely, because if everything is favorable, Under Armour could fight any decline in the general market by holding very well. It's got 10 points to go before it breaks under the 96 area, 9 points actually. And what we'd be looking at is this one of those stocks that you do not want to short? In fact, you want to watch to see if you want to actually buy it because it's holding so well. Do you have a position in Under Armour?
No, I guess my question was, can I buy Whole Foods here and for a trade up to, will it go back towards 60 again, 65?
Okay, that's a very, very good question. And I was asked this question this morning by a subscriber. And the question is something that I've stated very often. When the tide changes, you can, if you're a very adept and very good trader to go against trends, to short in a bull market or to buy in a bear market, you can have trends that go against you. But if the tide is going down, all news events will favor the tide. And it'll be so quick that to say, I want to make 10%, look how quickly, if it dropped from the 52 level and took out the low of 50.62, you'd be giving up 3 to 4%. So this is my suggestion to you. I know that you watch the markets very closely. If you are prepared to say that, let me go to the 120-minute chart, I'm prepared to trade Whole Foods, and each level that it gets to, if it keeps going higher, 52.95 is the next level of resistance, 53.50. And then the very big one will be 54.19, because if it takes out 54.19, there's a chance that 55.46, close to what you'd be looking at, would be the 200-period exponential moving average, and that would be in the 120-minute chart. That would be the resistance, and it hasn't been there since it broke down on the 23rd of December, when it hit 59.50 and closed at 58.20, it took out that 200-period exponential moving average. I'm going to do two things. I want you just to think about it. I don't think there's actually a rush to jump in right this very second, but in the 52.48 to 52.30 area, if you were to treat this as a shorter-term trade, don't get carried away by I would not put I would not get a big position. I treat it more as a trade. And I'd say it's in leg C. No, actually, I've got to do this carefully. 50.76. Yeah, it's in leg C, maybe peak D even, in the A, B, C, 55, 54. If it goes up 1 penny in the next 120-minute bar, that's good. It continues leg C. Yeah, I tell you what I would do. Think about it. You don't have to jump in. But if you wanted to start, I'm not even going to say start, if you want to buy a small position here at 52.46, it's really been beaten down. It's ready for a counter-trend bounce. I don't think the counter-trend bounce is going to take it more than it's 52.48, then to 53.80, maybe 54.40. That would be somewhere around there, I suspect, would be the real test, because if it closes decisively under the high bar of 54.19 made on the 14th of January, then it could do some testing of the 200-period moving average and the 200-period smooth moving average of 54.83. So, and 54.37 is the 9-period moving average in the weekly. So to play it for 1.5 points to 2 points, I'd only do it if, as you put it in, you put in a pretty tight stop of, say, 52.22. Something real, I would make it tight, because if it takes out 52, that's not good action at all. So that's my thinking, and I would treat it as a counter trend bounce. My target would be later on, 49 to 47 is the real test for Whole Foods Market, and I think it will be getting there, and it should do so in February. So I hope that helps you, give you some sense of what I'm looking at.
Thanks, Basil.
Thank you so much for calling, Robert, and good luck with the trade if you take it. Robert in Chicago. Now, let's do a couple of things here, folks. This rally that we're looking at in the Dow, it was absolutely imperative that the volatility index, VIX.X, pulls back and pulls back very sharply. So far, it's pulled back 6.57% at 16.21, but it's still in the 16s. If in the next 2 days, the VIX drops below 15.55 to 15.20, especially if it breaks under 14.90, we could really see this as a 3 to 5 day, maybe even longer, bounce. But I am calling it a bounce, and I have to respect the fact that within this, the context of this, there are some stocks like, as we mentioned earlier, Facebook doing really well. I just want to look at Amazon. When does Amazon come out with earnings? Is that today? Someone might help me in the den. Amazon. Trading at 397, up 13, made a peak F. I'm calling it a peak F stock because it was such a big pullback, and in the daily, a peak D in the weekly, but still only a leg E in the monthly with not a single sign of technical saying major turn to the downside. My suspicion is if there is a spike to the upside, the spike has to hold. First of all, it has to be above 408.06. So that is 10 points, 12 points. So it has to be 12 points higher, number one. It has to hold all the way through tomorrow. It then has to have support of this candle right here, 406.17, and then it has to push to 412 or higher. If it does that, that would say, hey, the stocks with really good earnings that are coming out, that would include Google as well. If Google spikes up 12, 14% and holds, they've got to hold, that could say, hey, counter trend rally. If you are short, be very, very careful. You'll have a chance to short again. In the meantime, these are the stocks that could hold the market in a position that says going into next week, and it could be into the middle part of next week, there could be a counter trend rally. I have to call it a counter trend rally as of now, but I also have to tell you this, that if I'm looking at the Qs, if Amazon and Google both come out with really good earnings, the Qs with a round number 89 high, that's going to be something to watch. I don't know if they can spike that high in just another day or two, but believe me, things are possible in the market, and we've already had a huge move to the downside. It has to be a bounce. This is actually a little bit bigger than a bounce. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians. Oh, wow. I was just mentioning, I got IM from the Den about now. NOW at 68.51. I don't think I've ever even seen this stock. It's up 18.94 at 68.51. NOW is a symbol, ServiceNow Inc. And it looks it's an IPO from June, July of last year. It's in leg D in the monthly. It's done a D in the weekly, and it's recycled, gone to an E, and now it's in a brand new leg. I have to call this B. I must say I have to call this B. And the daily just spiked up to B/F. Wow, there are some really fabulous stocks within the plethora of ones that are starting to look very weak. Now, I'm very upset. I wanted to buy the 200% long Dow this morning, and we missed it by 13 or 15 cents or something like that. And it's spiraling. The Dow's up 148, S&P's up 22. So there's no question that the pressure is like a cork in water. The stocks were pushed down, especially with yesterday's extra sell-off. That 170 point decline in the Dow, that extra pushed the cork down. And now as soon as you take your finger away, it pops to the surface just as quickly. And that's what we're seeing here. So counter-trend rally, I'm calling it a counter-trend rally, but there are certain things to watch. And within this context, there are a couple of stocks that are acting really well, and now it's like a sieve where you can see what holds and what doesn't. Now you're going to see which stocks Don't. Remember I mentioned Cintas, CTAS? CTAS? Look how it is just stuck. Yeah, it's got a nice little rally, but basically it looks stuck. I'm really watching certain stocks really closely. Why? Because when there's an opportunity to short again, the ones that were the weakest should be the quickest to decline. They didn't participate in the rally that started this morning, and therefore it's worth watching very, very closely. And I need to look at some of those, like Telephone, Verizon. Are these going to participate? Are the defensive type stocks going to participate? Are we looking at the Cloroxes? I wonder if that's still notated like it should be. Yep, it is. Cloroxes, which made a peak, D in the monthly, G in the daily, and G in the weekly, and D in the daily at 96.75, and has dropped to a trough G down to the 86 level. Are these going to participate? I don't think so. It's going to become very selective. So let me just show you something that I'm looking at right now. In the Dow, INDU, what I anticipated was a bounce. And that bounce could turn out to be a bounce that takes you to the 15,950 area with a good chance that if it lasts into next week without any problems, because this is, as I say, I believe the tide has turned, but if it lasts into next week, 16,021 is the 9-period exponential moving average. Somewhere just above 16,000 is going to be the real test. Well, that's not really true. 15,950 to 15,990 is going to be the very big test if it can get there. Look at the S&P, SPX.X, and we're going to make it simple again. S&P has 1804 as the 9-period exponential moving average. Fabulous move up today, 22.50, greater than yesterday's loss, and in fact takes away the last 3 days of selling, goes into the very ugly bar of the 24th of January. Now, what I was looking at before, just real quickly, I wanted to quickly go through gold again. Gold to me looks like it's pulling back, but I don't have any real signals. As I said, platinum had that the A pattern, straight up, straight down, which was very negative, and that had to hold the support that I discussed. Gold is holding okay, but if gold starts to take out, it's at 1242. If it takes out the 1230 to 1225 area in the next 2-3 days, you've got to be careful here. That gold could pull back a little bit more. So I think we've run out of time. Hey, stay tuned for Larry Pesavente. This should be a wonderful show with Larry. I want to hear all those different levels that he's looking at. And folks, programming all the way. Don't forget, Andy Hex.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
You're watching Tiger TV.